Insider information continues to be given from the government to the elites. I'm going to uncover the story here, look at the chart analysis, and tell you where the markets are likely headed. My name is Gareth Soloway, Chief Market Strategist here at Verified Investing. And as always, folks, we're going to focus on the charts. No BS. Just charts and data. All right. So what we have to do here, folks, is talk about the flagrant ridiculousness of what happened today. So if we flip to the S&P 500, S&P 500, you look at the daily candle right here, and it's really like, okay, no big deal. S&P up 0.2%, basically flat to positive day. But this does not show the truth of what happened today. We're going to flip over to the futures to show the pre-market action. So today, the PCE data was released at 10 in the morning. Where's 10 in the morning? Right here. Okay, right here. All right, look at what happened going into that at 8:50 in the morning. All right, so we're talking about 1, 2, 3, 4, 5, 6, 7, 8 candles. 8 10-minute candles were 80 minutes prior to the PCE data release. We saw the markets catch a bid. There was no news, no nothing. But for some reason, there was massive buying right up here all throughout this period for about over an hour going into the PCE data, right? Look at this. I mean, literally, these are all 10-minute candles. So every candle was green and an up candle. All right. Now, are you going to tell me that that's normal? Are you going to tell me that pre-market, when there's no earnings data, there's no nothing, that was just a random occurrence, a coincidence, that it was leading up to the PCE data? Or can we logically, data-driven, looking at the chart, assume that once again, government data was given to certain individuals ahead of time? They bought the futures early, and then look at what happened here, folks. This drives me insane. See all these tails up here? This again, so look at this, right? So you have all of this right here. This is where retail gets the data. So retail gets the PCE data, and it was basically in line, ensuring a Fed cut. Retail buys, right? So what you have here is retail buying here, all of these candles. And guess who's selling? All right, look at this. Who do you think's selling all these candles right in here? All institutional money is dumping into them. That's how you create these tails, by the way. That's the whole idea of a topping tail. Now, these aren't necessarily topping tails per se. This is more like a three-tail theory that I teach in my Winning Trader series, but it is a dead indicator of basically big money dumping into retail. And then look at what happens to the market. The market literally takes a dump and sells off. And then again, by the end of the day, what's going on here? I mean, essentially, we're just chopping the rest of the day. But this was so crystal clear. All down here, institutional buying, and then they dumped right into retail here and just dumped right into them all the way down. Absolutely astounding how blatant it has become. Now, listen, I'm going to be the first to tell you that for 100 years, 1,000 years, there's always been insider information leaking. But it is so flagrant in this day and age that honestly, it blows my mind. Like, it is so obvious. Like, at least before, they tried to hide it a little bit. Maybe it wasn't given to as many people, so it wasn't so obvious. But I mean, you cannot deny this chart. And this is absolutely incredible, the buying. So there's no PCE data. No, 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 no. And then right here, you get the PCE data, right? And it's like, oh, wait, now all the selling comes in. So all of those players that bought down here, they just unloaded, making millions of dollars on the back of retail that bought on that PCE data. Now, listen, the PCE data was in line, but it essentially ensures that we're getting a cut next week by the Federal Reserve. All right. So listen, I have to tell you guys about this stuff, right? So listen, let's go back to the charts. Obviously, does this change my viewpoint? No. The answer is, why are institutions dumping into retail? Because they know we're basically 1.5% from a epic cycle high trend line, right? Literally, this parallel has marked the bottom of the cycles and the high of the cycles. And therefore, what we can assume is it hit here and sold off. And even if it comes back and makes a new all-time high right around 7,000, it should sell off again. So what kind of upside does that give investors at this point in time? 1.35% upside, maybe 1.5 if it pierces the line. All right. In addition, look at some of these charts. Here's Apple. Apple, obviously a $4+ trillion company. Look at this. Here's that big parallel All right. Listen, I shorted this with members of Smart Money Stocks and ETFs this week. We're already in the money on this. This was a beautiful pierce of a parallel. Here's your weekly chart. So look, every major pivot low, major pivot high has been marked by this parallel. And look at this. And look at what is this candle formation? That's a topping tail, a bearish reversal signal. So not only did you hit the high end of the parallel here, which marks literally the highs of cycles in Apple, but now we're getting a topping tail on the weekly chart. Look at the SMH, guys. SMH, it's again, if we look at the daily chart, it's up 1% today, right? 1%. But on the weekly chart, I've shown you guys this before. When we got 102% extended from the 200 weekly moving average, dropped 45% back to the 200 moving average. When we got here in 2021, so this was 2021, this was 2024, and it dropped after 102% extension from the 200 moving average. It fell 40%. Now, we hit 102%. We corrected. We bounced. But look at on the daily chart what happened here, guys. We filled a major gap. Okay? So this gap fill right here, folks. Look at this. Right here. Look at that. We filled this gap. And so, listen, we could go a little bit higher, but the gap fill is key. This was the last gap that was not filled on the SMH, the Semiconductor ETF. And again, knowing that we have the weekly chart, which has the extension move here, and now we've filled the gap, my guess is we pull back next week on the semis. All right, then you go to complacency. So we know institutional money's getting insider information, then they're dumping into retail. If we go to the VIX here, let's go to actually, I want to look at this VIX chart here, the SIBO. Look at this chart on the SIBO. Let me get rid of the 200 weekly. It's down now at 1540. Look at this drop. All right. Now, we could get a little bit lower, but we're getting in alignment where, remember, the VIX is the volatility index, AKA it shows when it's low, people are complacent, which sets them up for disappointment and fear to spike. And when it's high, it tells you it's very high and there's a lot of fear. And usually it means the markets are going to bounce, right? So, north of, let's say, $30 on the VIX or 30 on the VIX, you start to say, okay, markets might be starting to set up for a bounce here. Once you get down to 15, you're starting to set up historically 15 and below. If you've ever bought the VIX down there, generally you will see a pop in the VIX, which means fear spiking, which means markets have to be coming down. Now, next week we have the Federal Reserve, so we got to watch that as well. But lots of signals, whether it's Apple, whether it's Nvidia's chart. Nvidia today, by the way, is down on the day. And look at this pattern on Nvidia. Down move, inside bar, and it broke key support. So you have this parallel. It broke down. Now it's bear flagging. That means this is likely coming. So all of the signals to me, including the shadiness of the insiders. I don't know where they're getting this money from or these insider information from, but it is so prevalent in this market that, and it's not a healthy thing. It adds to the idea that the markets are rigged against us. Now, for me, I can use the charts and still make money. But for retail, again, you're buying at the PCE data today, and the markets have already rallied every candle on the 10-minute for 8 straight candles, and you're buying up there because you think, oh, the PCE data is going to be good news and the markets will go up. And what does the market do? It dumps out on you. I mean, ridiculous, absolutely ridiculous. And, I don't know. It is what it is, but I always am a believer that I got to tell everyone about this stuff. When I see it, I study the markets inside and out, day in, day out, night in, night out. I want you guys to be on the same level as me in terms of understanding what's going on. This is one of the reasons why I use the charts, because I would never buy on PCE data. I buy on chart levels, which are pullbacks into support, not when the market has gone vertical and then we get data out. And so when you use the charts, you actually start to get ahead of these moves. Very cool stuff. I do encourage you guys to learn more and more about chart trading, technical analysis. It is game changing, but keep it simple. There's a lot of people out there that have charts that have so much craziness on them. You don't need that. I can show you how to do it with trend lines. That's all you need. Trend lines and a basic understanding of human psychology. Have a great rest of your day, guys. Thanks so much for tuning in. I'll talk to you soon. Take care.